Well, I think corn moved higher today. That was about it during a very volatile session for the markets today. The Dow falling as much as 325 points at one point earlier this afternoon.
This is coming off the best month in 9 years. It's hard to remember. It was just a couple of days ago. We ended November kicking off with a broad sell-off. Worries, of course, about MF Global and Greece announcing it will hold a referendum vote on its bailout package, a package everybody thought was a done deal. Well, the news sparking a new wave of fears about a potential default. So is there any hope for the Bulls, or will the Bears take control of November? With us now to debate this is Larry Glazer. He is managing partner at Mayflower Advisors, and Curvin Miller. He is vice president of Russell and Company. Let's start with the Bull. We need some good news on a day like this, Larry. What gives you hope?
No question. Well, certainly, despite a huge stock market rally in the month of October, it's inevitable that we would expect to see some continued volatility, particularly with the challenging headlines that we continue to see coming out of Europe. No question. And we all know that we have the looming supercommittee debate coming up in this country towards November. However, despite all of that, the stage has still been set for the potential Santa Claus rally and a potential year-end boost to stock markets. We have very reasonable valuations.
When are we going to see that rally begin, Larry?
It could be tomorrow. We've seen very reasonable valuations in the stock market. Again, one of the most important things, we see decent corporate earnings, something to stay focused on that we don't see in bear markets. We see a high degree of investor skepticism. Investors did not believe in that October rally. They're on the sidelines. That skepticism is indicative of a market low, not an investor peak. And that skepticism could fuel this market higher.
All right. Well,
so we see all of these short-term negatives.
You think the market could go lower, much lower. How low do you think it could go?
Well, you know, I think we're going to trade in a range. We've seen so much volatility and being held hostage by Europe since all summer and last fall. You know, we're going to trade in a range. You know, my question is why try to beat a secular bear market? You know, with all the things I'm seeing out there, I think it's important to be repositioning to things more that are non-correlated or more principal protected. I think that's really what's going to let clients sleep well at night. And, you know, I think what it's about is the appropriate level of risk. You know, I think some risk is always good to take, but, you know, too much in times like these can really, really hurt a client's portfolio.
All right. Well, Larry, Curve says you're fighting the tape here.
Yeah. Yeah, well, I certainly agree that there are many long-term challenges. Certainly in an inflationary environment, investors that move to cash will have very little protection against future inflation. We could see higher interest rates. We could see an inevitable slowdown in China. But we don't have any of those things right now. We have a very accommodative Fed. This is an environment for investors to sell some of what's held up, sell some of the winners, rebalance out of fixed income, and look to do some bottom fishing and be opportunistic.
Finally, Curve, what about all that cash that's out there? There's $2 trillion at least on the sidelines. Won't it eventually find its way into the market?
Well, you know, at this point right now, as long as we have the issues facing us in Europe, and I think even here, more importantly, domestically, once the attention shifts from Europe, whether they fix something, you know, or not, the attention comes back here. And with the amount of debt that we have and the challenges in unemployment, as well as a weak GDP, you know, I'm thinking that cash is going to stay on the sidelines for some time.
Last word to the Bear,
again,
Curvin Miller. Thank you very much. We've got to leave it at that. Larry Glazer, good to see you as well. Thanks a lot, guys.